Welcome to Westegg. Today, we're reviewing Robinhood. Is that right? Is that what we're doing? Let's get this fired up. Okay, let's go ahead and open up the app. There we go. You can see my current portfolio, if you can call it that, $653.75 right now, 67 cents. It's just going to keep going down, isn't it? Okay. All right. Actually, today we're down, but if you look at the week, we're doing pretty well. I don't actively manage this quite as much, but I keep just buying stuff. You can see here some of the things in which I have invested. We have, here's Realty Income. That's a REIT, an R-E-I-T. That's going to give you monthly dividends. I've held that for not a month, so I haven't even seen the first dividend of that. Stag and Store are both those monthly dividend REITs, those real estate investment trusts. One of the stocks that I have been holding for a while is GE, and I've tried to catch it on the bounce. So I've got 15 shares, average of 981. So we are up a couple bucks there, 277. Really just hoping that GE will continue to rise. And the biggest reason is that it is a massive conglomerate that has a number of facets to its company. And it seems like the core business is still there, and some of the issues of just offloading some of the debt and some of the toxic assets, if you will, or liabilities now, is something that can be fixed. And so in the future, I think it will continue to be a good business. That's why I'm holding 15 shares. Of course, it's only just 15 shares as well. And then let's see, what else do I have? GSK. Okay, GlaxoSmithKline. This is a pharmaceutical company. It's pretty big. It is, let's see, what's the market cap? $99 billion market cap. It's pretty big. I also have Pfizer in a Vanguard account, and I've had that one for a number of years, for as long as I can remember. And so I bought this one just to kind of keep an eye on it and see what it does and what it has done versus Pfizer. It's GlaxoSmithKline, I believe, is based in Europe, in the UK. And so it's about half the market cap of Pfizer. Solid dividend, though. Actually, we can see here. Oh, interesting. Robinhood gives it a 15% buy rating, but 73.7% hold. You can see the quarterly earnings, and then people also bought. So these are some of the things that people buy together. Whoops. Let's go back to that. Okay. Yeah, and you can see Pfizer there is one of the stocks that often gets purchased at the same time or as a complementary thing. Okay, so we're looking at, so the dividend is going to be 60 cents, 59 cents on April 11th, and I did get a dividend January 10th for 48 cents. So that's an increasing dividend. That's not bad. And that's actually a pretty good increase as well. Dividend yield is currently sitting at 5.4%. which obviously that percentage changes based on the current price of the stock, as well as like what that dividend continues to increase to. So that's essentially a post-dated number, something that's already happened. And then, well, actually, you can see that I have a number of other stocks. I've got PER. This one's an interesting one. I bought this one just to see what the experience of owning an oil trust is. So this is a Sandridge Permian Trust. This is like West Texas Oil. This is the WTI index. And this is a series of wells that produce oil, and then every quarter they pay a dividend, and the reason that this thing exists is to pay the profits out to shareholders. So it's not a stock, it's not a company in the same way, it's a trust, and it's structured differently. This one has been kind of an interesting hold. You can see I'm down $1.43 on that. I do have 15 shares. Now it's super enticing. Look at the price. It's $2.35, which is relatively high in the last little bit, last quarter probably. You can see that it's kind of gone up, but you'll notice that there's kind of, it's not totally up and to the right. If we go to the 1 year, let's see what the 5 year looks like. Yeah, there you go. 5 year. So we were looking at a stock price of 12, almost 13 up there, $10, and then it just slowly just decreases. Now, if you look at the year that's happening, it's 2014, 15 into 16, oil prices, price per barrel has been dropping. And so because this is a trust, the stock price and the value of the oil it sells, and then therefore the profits it receives from those sales, is going to be completely contingent on the price of oil. Oil price per barrel goes up and they make a ton of money with the amount that they have drilled and pulled from the earth and then sold, that stock price is going to go up because the dividend is going to go up. People are going to invest in that. And you'll notice too, if we scroll down, see the dividend yield? That's why I bought it, was because it had a 22.63% dividend yield. I mean, that is like massive. It's unheard of. But again, it's not a stock. It's a trust, and it's structured differently, so it will behave differently. I went ahead and just bought a couple shares just to see what that's like, get that experience of owning a trust. You can see there they've got solid earnings quarter after quarter. They're just kind of continuing going up. But again, that their earnings, a trust is going to, it's going to be a finite amount of wells. Maybe they'll buy more wells and whatnot, but generally it's a set term where they will drill a well or a reservoir of oil until it's depleted, and then that trust will close. So I think this trust is actually set to close in 2030 or something. And then real quick at the dividends, I got $1. And it was, you see that amount per share. So in February, I had 11 shares and I got 9.5 cents per share. Now, not bad. And again, you've only got a $2 and change stock price. And so you're going to get a 20-something% dividend yield. But look at the year, or the quarter before, November 28th, 2018, number of shares 8, amount per share is 11.5 cents. So that's actually a decreasing dividend. I don't know if I'm going to continue to hold on to this. I'm definitely going to continue to hold on to it, just because Warren Buffett says the number one rule in investing is don't lose money. So I'm down $1.43 on the stock, or on the trust rather, currently. I just don't want to sell it while I have a loss on it. If I can just hold it and just keep getting dividends. And that's why I went in a little bit more with, you notice I had 8 and then 11, and now I have 15 shares. And that's just to continue to get more dividends. I don't think I'm going to continue to invest in this, but it's a good one to, owning a trust is just like a good experience to have. And that is, just to see how that behaves differently than like a stock or even an REIT. So yeah, we don't have to go through all of these, although I will say this is Myrna. This is a new biotech firm that recently went public just like a matter of months ago. Yeah, look at that. What was this? December 7th, they went public. Came in at 22. It dropped like immediately, interestingly enough. Sometimes IPOs will get a pop. This one tanked, and we're kind of catching it on the back end, if you'll notice here. But right now, 21.71. I'm down $1.38 on this. Man, my portfolio is not looking hot right now. No dividend yield on this one because they're going to be reinvesting those profits. One of the big things with this firm in particular, or this company in particular, is their work with mRNA, and that is a new way to administer medicine into the body, that you can write code, DNA, for the body, put it into the body, and then it gives you on a on a biological or DNA level, it will tell your body how to fix itself. So that's a new way to do medicine. I thought, you know what? Let's just buy a share, see what happens. Worst case scenario, it's $20 if the company totally goes under. But it's not that they're riding solely on this mRNA. That's kind of their new thing. But it was a biotech firm that was just private and it was a couple $1 billion firm, I believe, as a private company. Then they went public, and it looks like they've raised nearly $7 billion in capital. Also, Robinhood gives it 100% buy rating, which we'll talk about that later. They do give you a volatility, they give you a history, and then a little bit you can pull up more information about Moderna as well. Okay, so we have AMD here. You'll notice that is like microchips. That's a competitor to NVIDIA. So they're going to do processors and GPS or graphics cards. And then Blackline is I believe these guys are they're like SaaS, software as a service. They do financial controls. It looks like they do, I'm pretty sure I bought these guys because they're super hot. Like you can see the stock going up the last 3 months, even the year's pretty good. Their 5 years, great. What are they up? They're 5 years up 92%. They essentially are like admin for new companies or for a company. They'll do payroll and kind of the back end software stuff for employers handling employees. Okay. Now let's get into kind of the fun stuff here. Alphria. This is a pot stock. So I went ahead and just bought this. You can see that I bought that at $9.37. I only have one share. I'm up 16 cents. I'm very bullish on pot. A lot of people are like, yo, pot's bad. But I mean, if I hold Pfizer, if I hold GlaxoSmithKline, I mean, if you're okay with these big companies doing this, it seems ridiculous not to try and get into medical marijuana as well, at least as an investor. I mean, I'm not necessarily advocating for getting high and not doing anything with your life, but like, if this is a medicine and it's helping people, then how is it any different than Zoloft or something? They're just controlled substances, and then you have weed that can also be a controlled substance and provide medical benefits to people. So I'm holding that one. This one actually, what is this, Aurora? Yeah, Aurora is hot right now, and I feel super cool because I bought it at 6, and everybody's now catching on. If you look at some of the aggregate financial news, everybody's like, yo, have you heard of Aurora? And I'm like, I have. Okay. Hexio. Hexio is, I believe, this is another pot stock, but this is a distributor, and they do the manufacturing and production of it. So this one is another pot stock. Let me see if this is the one. Okay, no. And we're up 53 cents. Very good. Okay, so that's kind of a gist of just like what I've been holding on to. A lot of this isn't, right now, this isn't what I'm trying to do to I haven't been using Robinhood as a serious long-term growth platform. I just wanted to test it out. I've had the app on my phone for a number of years. I think when it came out, when they were first really hot on the scene doing their big push for commission-free trading. Like that's the big deal, right? And so I've just kind of been tinkering around, playing with it, seeing what it is. Because I use Vanguard for more of my, with work, I have a Roth IRA and some long-term savings set up that's on autopilot, if you will. So that's where retirement's going. This is, I take a little bit of money every once in a while and just play around with it just to see what Robinhood offers. So far, I really do like it. I think that the whole commission-free option is really a game changer. If you look at some of the bigger companies that are doing investing, Charles Schwab, E-Trade, Vanguard. A lot of times it's $4.95 a trade, and so they'll charge you that commission per transaction, not necessarily per share, but if you buy 10 shares at a time or something, it's just $4.95, which really not that bad, but when you can do it for free and those $5 can go into buying more stock, dope, I'll take it. And I think Vanguard is actually $7. And then if you pass over a certain number of buys that year, if you trade more than, I don't know, 5 or a dozen times or something like that, it actually jumps to like $20. So in that sense, Vanguard is more expensive, but you have to kind of think of what is it exactly that Vanguard is providing. And Vanguard is a index, kind of hands-off. It's really cheap, but they do this one thing really well, or they do a few things really well. It's not meant to be it's not a day trading platform. This is long-term growth, set it, forget it, and just like watch those dividends stack. So that you don't really have to worry about doing all of the more in-depth active trading on Vanguard, or at least you shouldn't see Vanguard as more of an active trading platform, which is, it's okay that they have fees that are a little bit higher because that's not what it's used for. And that is where I think Robinhood really comes into play. Commission-free trading. They do have certain limitations on how often you can day trade. They will peg you as a day trader if you trade too often within a 24-hour period or within one stock market open and close. The biggest shtick that I have with Robinhood is that they do not do automatic reinvestments of your dividends. So one thing that's nice about pretty much most every other platform is that you can reinvest dividends and you can have half shares because of those reinvestments. Robinhood just pays you out in cash, which has its own tax implications perhaps, but then you have to like actively trade. You're on there and like you have to like pay attention. Okay, when's my dividend coming out? And you have to like know. And I mean, they'll tell you, but then you're getting your 45 cents, 49 cents, or I'll get a couple dollars between all of these dividends in the next quarter. But I have to then, I can't, it's going to take a lot more time for me to save up and then get that other dividend. In other words, let's say I have a $10 stock, I get 10 cents as a dividend. I got to wait like 100 more iterations for that to then buy another stock of itself. Whoa. So it's not, you're not getting the benefit in the same way of compounding dividend interest because of that, right? If you were going to take 10 cents from a $10 stock, then the next time it iterates and you get the next dividend, then it would be $10.10. And so you would be getting those incremental jumps. But that's exactly what compounding interest is. And that's the benefit of it, is that each time the dividend comes out in that next quarter or even next month, you're going to be getting it on that full price. But Robinhood, because they don't reinvest dividends, you're getting it off of that $10 until you have enough money to then put back into a whole nother share of the stock. Not that big of a deal because you can obviously just continue to put in outside money. And so it just takes more of your time and effort to do that. I think if they were to be able to, even before, because you can't short stocks anymore, not anymore, you can't short stocks at all with Robinhood right now. So I think if you were to, I think if Robinhood were to make dividend reinvestments a thing, even before you can short sell, that would be the move. And that would really, I think that would actually bring more value to the platform and help it be seen as a more legitimate platform for financial security and savings and whatnot. Because even if you were to bring in short selling, short selling, you'd have to, you have to set up a system where you're borrowing those shares on the short sale and whatnot. So that's obviously got a lot more back end infrastructure. But that just plays into what people see it now as, which is just this fun thing that you can use to like day trade and screw around with. It's not necessarily something that is an institution. I think if you can really show that it's an institution, then people will flock to it even more and they will see, oh, you know what? It's legit. Until then, though, it's this fun thing that millennials do. I'll continue to put stocks and buy stocks with it because it is commission free again. So I think I'm going to start doing more just to see what these monthly dividends are all about. I'm going to continue to put more money into that and just see how that compounding interest hopefully really should work. And really the benefit that I'd be using is it would be, what do they call it? Dollar cost averaging, where you just continue to buy despite what the market says. And then over time, you just end up with an average price that you've paid for the stock versus waiting for the market each time to try and hit the low every time. And, you know, really ultimately passing up on opportunity to just have the stock, especially if you're a dividend stock, because most stocks pay out quarterly. You want as many shares as you can get on each quarter, or at least before the quarter, right? So if it's, you know, a December, you buy a share in December, you get the dividend on the one, you want to buy as many shares as you can before, what is it, March probably, that end of first quarter, maybe March or April, depending on where your fiscal year is at. So you want as many, because it's just iterating 4 times. I'm going to continue to post videos about Robinhood and kind of my journey as I continue to build Robinhood and see what stocks are good. And I'm going to do it somewhat by just doing it, not even talking about it. I want to be able to say that I've bought the stock. And that's kind of why I buy in, even if I'm not 100% sure, like that Permian Trust, PER, that Sandridge Trust. Even if I'm unsure of like if it's a great buy or not, I just want to buy into it just to do it and iterate and whatnot. We'll do that on more videos. And then the other thing is I'll go ahead, they have a feature here where you can do free stocks and you can invite friends. I think they do limit it up to $500, but I'll go ahead and post that link in the comments below. You guys can grab that link and you get a free stock on Robinhood. Obviously I will also get a free stock on Robinhood as well. So look for that link in the bottom. If you guys want to continue to see more videos from this channel, Westegg, where we follow new money in the future of finance, go ahead and like, subscribe, share with your friends, and then post a comment. Let me know what kind of content you guys want to see. You know, I'm not the most knowledgeable guy in finance, but I did get a degree in economics. So that's what I'm trying to do here, is just use that and pretty much take the hobby that I do and just put it online and share that information with other people, because I've had a number of people just talk to me and say, you know, what's an index fund? Where should I invest? And you know, I don't know all the answers, but I think it'd be a fun exercise, if nothing else, to put the content online so that you can kind of spread that knowledge and you can learn from my experience. I might do something and you'd say, hey, you know what, probably won't do that, but you'll know because I did it and I kind of forged ahead for you. So if I can be that for you, would love to. Again, like, subscribe, and thank you so much for watching. Hey,